What's up, peeps? Welcome back to my financial literacy corner. I like to pay attention to what the institutions, hedge funds, and asset managers do, right? Ranging from the smallest amount all the way up to 501 billion to 1 trillion. So, this is what they're saying in regards to a survey of what was taken. 74% of respondents expect crypto prices to rise over the next 12 months, with nearly 60% viewing crypto as a top three opportunity to generate attractive risk adjusted returns. More than three quarters of respondents believe the crypto market structure is the most important area needed of regulatory clarity. Respondents largely believe that the Genius Act will drive greater institutional stablecoin adoption, especially with financial services firms. 73% of respondents intend to increase their digital asset allocations in 2026, driven by greater regulatory clarity, expanded availability of regulated products, and improved infrastructure. Smaller firms, 1 billion to 50 billion assets under management, are particularly bullish, with 77% planning to significantly increase the holdings in 2026, compared to 69% for the 51 billion to 500 billion asset under management and 64% for the 501 billion to 1 trillion assets under management firms. Further regulatory clarity and greater institutional adoption are seen as key growth catalysts, while innovative technology continues to be the primary reason to invest. Let me repeat that one more time. While innovative technologies continues to be the primary reason to invest, the proportion of firms allocating more than 5% of asset under management to digital assets is expected to rise from 18 to 29% by the end of 2026. Firms allocate digital assets according to the following categories: alternatives, 40%. Its own category, as an example, crypto or digital assets, 32%. Innovative and emerging technologies, 19%. And other include currencies, FX and real estate and commodities, which is sitting at 9%. Continued multi-custodian models are most prevalent among firms with 501 billion to 1 trillion assets under management. 69% compared to the 55% average for all other asset under management segments. The primary reason to switch from a multi-custodian to a single custodian model are integration costs, 67%, and ease of vendor management, which is 60%. The primary reason to use a multi-custodial model is risk reduction. Among those continuing, 81%, or switching, 74% to this model. Regulatory compliance has become substantially more important to investors, rising from 25% in 2025 to 66% in 2026. As rulemaking and market structure have taken focus, the key importance placed on security and key signing protocols increased sharply from 8% in 2025 to 66% in 2026. Similarly, reflecting heightened investor caution following recent industry incidents. Institutions are prioritizing trading, custody, and asset tokenization over the next 2 years, and they are increasingly partnering with crypto native firms, such as like when MasterCard had bought that stablecoin company, so that way they can still be relevant. 86% of respondents already use or express interest in stablecoins, and they are increasingly interested in using them for internal cash management and money movement. While USDT has a larger market cap, USDC has become respondents' most used stablecoin, likely driven by stronger Genius Act compliance. 56% of respondents expect to engage with DeFi protocols in some way by 2028. 13% are already engaging, and 43% plan to, with primary use case being lending and derivatives. Lending and derivatives. 13% are already doing it, and 43% plan to by 2028. So, not financial advice, but just letting you know what these high, and I mean high money movers. Remember, the smaller firms are 1 billion to 50 billion assets under management, and they're particularly bullish. The other ones, which is 77% to increase their holdings, is the 551 billion to 500 billion, and as well 501 billion to 1 trillion asset under management firms. They're bullish. So why aren't you? Anyway, just wanted to give you some insight as to, like I said, what these hedge funds, asset managers, banks, all these institutions are particularly bullish in regards to what's happening and what's to come. And the only thing of what they're waiting for is this regulatory clarity to come about. So it makes me wonder, once this Clarity Act is signed, I wonder exactly how much of these billions and trillions is going to be poured into this marketplace. Since things are pennies on a dollar right now as we speak, once they get their mitts into it, it's not going to be like that anymore. Anyway, thank you guys again for coming to my financial literacy corner. Y'all have a good day and happy investing.